Do you believe Ethereum could reach $15,000 in less than 12 months? At first glance, it sounds impossible, maybe even a little crazy. But that's exactly what Tom Lee, one of Wall Street's most respected strategists, just predicted. Now here's the twist. When you look at the latest market data, the story shifts. The numbers aren't just supporting Tom Lee's bold call, they're hinting that he might be onto something historic. If you've ever wondered when the most important year of your financial life could be, all signs are pointing to 2025. And if you're ready, you could be in the driver's seat. Let's break down why Tom Lee, a name synonymous with accurate and timely market predictions, is making this call right now. Lee isn't just another talking head. He's the strategist who called Bitcoin's legendary surge past $10,000 back in 2017 and warned investors ahead of the brutal 2022 crash. So when he speaks, the smart money listens. This time, Tom Lee is projecting that Ethereum, currently trading around $3,700, could 5x to $15,000 in the next year. What's behind this conviction? Three powerful trends that are converging right now. First, massive institutional adoption. For years, Ethereum was the playground for coders and crypto diehards. But that's changing fast. Banks and financial giants are moving beyond experimentation and building real-world infrastructure directly on the Ethereum blockchain. Take Visa, for example. They've just launched the Visa Tokenized Asset Platform, VTAP, on Ethereum, allowing banks to issue and manage digital tokens backed by real fiat currencies. BBVA, a global banking heavyweight, is already piloting this platform. And as these pilots go live in 2025, the ripple effects could be enormous. Second, the arrival of spot Ethereum exchange-traded funds, or ETFs. This is the big one. On July 3, 2025, U.S. spot Ethereum ETFs recorded a staggering $148 million in net inflows in a single day. BlackRock's ETHA ETF alone saw $85 million pour in. Why does this matter? Because ETFs are the on-ramp for trillions of dollars in institutional capital. Once these products are fully greenlit and integrated into financial markets, the floodgates could open, sending Ethereum's price skyward. Third, timing. Ethereum has a well-documented pattern. It tends to rally hard 3 to 6 months after Bitcoin's big moves. With Bitcoin recently setting new all-time highs, history says the clock is ticking for Ethereum's next leg up. This is the Supercycle effect that seasoned investors are watching closely, a window that only opens once every 4 years. But it's not just headlines and hype. Underneath the surface, on-chain data is telling a powerful story. Let's look at the numbers. Whale accumulation is accelerating. Over the past 2 weeks, large holders, often called whales, have quietly snapped up more than 500,000 ETH. That's not retail speculation. That's institutional conviction. At the same time, the amount of ETH sitting on exchanges has dropped to all-time lows. When investors pull coins off exchanges, it means they aren't looking to sell. They're holding for higher prices. Network activity is also surging, up 18% month over month. More users, more transactions, more real-world use cases. This isn't speculation, it's adoption. And here's the kicker. Ethereum has been deflationary since its EIP 1559 upgrade. Unlike traditional assets that inflate over time, Ethereum's supply is actually shrinking as more is used. The more the network is utilized, the less ETH exists in circulation. Combine rising demand with falling supply, and you have a recipe for explosive price action. So what are the world's biggest players doing right now? They aren't waiting. Grayscale, BlackRock, Wintermute. These names aren't just spectators, they're actively accumulating ETH. Wintermute, one of the largest over-the-counter trading desks globally, recently declared they've cleared their ETH inventory. In plain English, the supply is gone. If you're holding out for a dip, you might find yourself watching from the sidelines as the price soars. This is the point where most retail investors get it wrong. They wait. They hope for one more pullback. Meanwhile, the smart money is buying quietly. building positions before the headlines catch on. By the time the average investor reacts, the train has often already left the station. Now let's play out the scenario. Imagine you're holding just 10 ETH right now at $3,000 apiece. If Tom Lee's target hits, that's $150,000. Life-changing money for many people. But it doesn't stop there. Historically, when Ethereum peaks, the altcoin season tends to follow. That's when projects built on Ethereum, like Arbitrum, Optimism, and Polygon, can explode in value, sometimes by 10x, 20x, or even more. This isn't just another bull run. It's a once-in-a-generation supercycle, the kind of opportunity that only comes around every few years. So what should you do next? First, don't let fear of missing out drive your decisions. The worst mistakes happen when emotions take over. Build a strategy. Educate yourself. Allocate your capital smartly, focusing on high-conviction assets. Bitcoin, Ethereum, and a handful of quality altcoins with real-world use cases and strong teams. Most importantly, don't be late to the party. The signs are clear. Institutional adoption is accelerating, supply is shrinking, and network activity is booming. If you wait for mainstream headlines to confirm the trend, you could be buying at the top. If you want crypto insights that cut through the noise, fast, clear, and grounded in real data, stay connected here. And now, it's your turn. Do you think Ethereum will hit $15,000? What's your price target for the next 12 months? Share your strategy, your questions, or your boldest predictions. The next year could redefine your financial future. Let's talk about how to be ready before it's too late.